My name is Bernd Nussbaumer from macrobeat.co.uk. Today I have a few slides for you where we're going to be talking about the SP500. It's a chart that it showed last week, which looks even more interesting for this week and might actually be more relevant this week and in the time ahead. Further, we just have a sort of almost a central bank special. We're going to be looking at the Aussie dollar, the dollar CAD and the euro dollar. They all had some significant rate meetings, central bank meetings this week, and the reaction is something I would like to go through with you and discuss with you. So on the first slide, we see the SP500. That's a chart I showed last week where we highlighted the big 2820 top that we had, a triple top from October, November, and December of last year. And earlier this week, we did hit that level again. Yet again, we had a sort of sharp turn, which actually started to accelerate today, which we come back on it a little bit later on. The first slide would be, or the next slide would be the Aussie dollar. Here we had the RBA meeting on Monday, so they kicked off the week for the big central bank week. They continue to signal a more neutral stance, which is still dovish in comparison to where they have been before, where continued worried on the housing market, continued worried about global growth in China. There's just almost no chance of actually any rate hike in 2019. And from what we heard this week, several banks are actually calling for rate cuts in summer and into autumn of a 0.5% in the base rate. So continued dovishness around global growth. The Aussie start to suffer here. We start to hit the levels again that we've seen just before the flash crash early in January, and sort of break through these levels, and we will suddenly start to talk about levels that we last seen many years ago, and additional pressure really in terms of risk, in terms of outlook on growth. The next slide shows the dollar Canada. We had Bank of Canada meeting on Wednesday. They have been rather hawkish in the run-up to this meeting. They've been hiking rates, as we know, in the previous few months. It probably kicked off with the weak GDP data from last Friday, which is the sort of first leg up you see here on dollar Canada. And then with the Bank of Canada signaling a rate pause for the unforeseeable future is really what is now putting the Bank of Canada alongside most of the global central banks, as the Bank of Canada really has been the one standout, the last one left that has been hawkish, and they just really started to line up now with the rest of the world central bank to get the sort of dovish twist. The next leg, obviously, dollar CAD up to the 134.5 level, we did get on the back of the dovish Bank of Canada meeting. The market is pretty long Canada in the crosses as well, so we've seen the market buying Canada for the last probably 6 to 8 weeks. So I would expect, after a little bit of consolidation here, I would expect further weakness in the Canada and a retest of the old highs 136.60 and possibly higher can't really be ruled out. The next slide shows the euro dollar. So there we had the ECB meeting today. There was already a little bit the M&I sources that talked about the downgrade of GDP, the downgrade of CPI is to be expected, and that's really what we got. But we got as well what actually the market did hope for, which is the ECB delaying the first rate hike that has been seen at late, after summer of 2019. And now we know from the forward guidance there will be no rate hike in 2019. So more or less it's been kicked into 2020. If you look at the downgrades on CPI, rather some bigger downgrades there, which means there's really no chance of any rate hike anytime soon from the ECB. The euro didn't take it well. We start to really close in on the lows that we had in November of last year, and the break through this area would really open new territory for the euro. The only thing that could actually work against a further move down in the euro would be if the US data that have been really surprised on the upside would suddenly really start to surprise on the downside. But if the US data holds in here, there could really be a lot of pressure on the euro in the weeks to come. That is me, Bernd Nussbaumer from macrobeat.co.uk. I wish you a lovely weekend. Thanks very much. See you next week.